welcome to this month's Trade Floor Update. Today I'm joined by Portfolio Manager Aditya Thacker. Aditya, we've had a devastating start to the year in 2020 with both coronavirus and bushfires. How do we see these impacting markets, and what performance expectations should investors have looking forward?
Yeah, so clearly tourism will be the main channel that will affect the macro environment in Australia. But on top of that, we should see a near-term hit to agricultural output, investment, and a little bit of a hit to sentiment as well. Now, some of this will get paid back in the second half of the year as government spending picks up. But overall, we think this poses about a hit of about 0.2% to GDP. Keeping in mind that the RBA's growth forecast is only trend-like at 2 3/4. Should this realise, growth below trend will mean that the unemployment rate is unlikely to fall much further, and hence the RBA will fall short of meeting their inflation goals. So with this in mind, we think that the RBA will be forced to ease in the second half of the year, taking the cash rate to around 0.25%. So in terms of returns that investors should expect, after a pretty stellar year last year, investors should moderate their expectations for core bond returns. But in this kind of low volatility environment, bond yields remaining very much range bound with a slight downside bias, we think investors can expect strong coupon-like to slightly above returns. So low to mid single digit returns.
And Aditya, where do we see opportunities in the markets at this point?
So, despite these kind of relatively low yields, in this kind of low rate and potentially an environment where the cash rate and TD rates are falling, that search for yield and income is particularly providing a strong kind of technical bid to credit. And I think that will persist through this year. So even though we're somewhat cautious on generic corporate spreads, we do still find lots of relative value opportunities between sectors and names. So a couple of examples there. Through the back end of last year, when Brexit uncertainty was very high, we saw a really good opportunity to enter trades in UK senior financials. So these are household names like RBS, Barclays and Lloyds, and very much the top part of the capital structure. And these still remain quite attractive at spreads which are almost double Aussie major banks. And still looking attractive on a relative value basis compared to where they trade in European and US markets. More locally, we also see we're a lot more interested in a couple of names like Lendlease and Downer. These names have had some volatility in the past, some issues with management, but we think with Lendlease, for example, they're looking to sell their engineering department. Likewise, Downer is looking to offload their mining services component of their businesses. And I think if both of those should happen, the earnings profile for these companies should become a lot more clear, less volatility. And given the spreads, they have underperformed a little bit in last year. We think that those type of names will provide really good opportunities. And lastly, a nice kind of pairing that we've had in our portfolios has been, we've had long-term supporters of energy names, the likes of Woodside and Santos, but against this, we also like holding a little bit of exposure in Newcrest, which is a gold producer, and these two kind of offset quite nicely. So if we do have a bit of a deflationary shock, a hit to oil prices, it's typically an environment where gold prices do well, which will benefit Newcrest. That pairing is also working quite nicely in our portfolios. But on top of the relative value opportunities in credit, as our clients know, we manage our portfolios using our 5 risk factor framework, and we're constantly looking at relative value opportunities in both in terms of rates, yield curve shapes, FX, and volatility sales as well. So if we can do little bits and pieces across those risk factors, we can still maintain additional carry and yield enhancements to our portfolios.
Great, thank you for your time today.
Thanks.